am joined today by the lovely Durriya Pierce. So excited to have this conversation and to have Durriya as our guest today. Durriya Pierce is a certified financial planner with over 8 years of experience helping individuals and families navigate their financial journeys with clarity and confidence. Originally from the Bronx, New York, Durriya brings a grounded and empathetic perspective to financial planning, shaped by both her personal roots and her professional past. Durriya's career has included roles at Ernst& Young, Merrill Lynch, and Albert. She currently works at Fruitful, a fintech startup making expert financial guidance more accessible and affordable for everyday Americans through a membership platform. Whether guiding members through major life transitions or helping them build long-term wealth, she's passionate about empowering people to take control of their financial lives. Outside of work, you'll likely find her in the kitchen experimenting with new recipes, exploring nature trails, or practicing yoga to stay centered and inspired. Please welcome Durriya Pierce. Welcome to From the Heartside Out.
Thank you so much for having me, Sierra. I'm super excited.
I'm very excited as well. I work with a lot of couples, and money always comes up at some point. What to do with it, how to save it, spend it, invest, prepare for all that may come at end of life and kids and all of those sorts of things. And so I wanted to talk with someone who knows a lot more about that than I do. I'm like, I can help folks with the mental, the emotional part of this, but I can't help you with the actual what to do or how to keep this from being an issue in your relationship. So thank you, Durriya, for agreeing to lend us your expertise. Is there anything that you would add to your introduction or anything that you want to share about you and what you do?
Yeah, absolutely. Thank you. So I love how you mentioned that you speak with a lot of your clients about finances, like that naturally just comes up as part of your conversations, because in our conversations, we do talk a lot about emotions. Like, how are you guys feeling about this? Yes, I can give you the tactical steps to reach your goal so that you can purchase your first home, so that you can make sure that you are on track for retirement. But I need to know how you're feeling so that I can understand how that is going to impact you actually following through with these things that I'm giving you, these insights, these directions that I'm giving you. So yeah, it's very much a emotional conversation that I'm having with my clients as well.
Yeah. And I know you work with individuals, you work with families. Can you talk a little bit about what does this work with you look like? Who are the people that you're working with? How do you help them? All that good stuff.
Yeah. So the folks that I'm working with are typically around the ages of 30 to 40. Some fall outside of that range. And these are people who just have questions about their finances. So whether it's like, hey, I'm trying to pay down debt and I'm also trying to save at the same time, which one should I prioritize? Or am I okay for retirement? Like, I know my day-to-day finances are okay, but I just want to make sure that I'm saving enough to be able to provide myself my desired retirement lifestyle. So a lot of people are very surprised when they come in to work with me because I back everything up, right? I'm just like, let's start from the ground up. I need to look at your foundation and understand what is happening in terms of cash flow coming in and cash flow coming out. That's always where we start, is with the numbers. And then we build from there. Once I'm able to have a clear picture as to how much money can we actually sustainably save long term? How much money can we actually invest long term? Does this actually fit into the money management system that you currently have? If so, we move on to next steps. If not, then we're breaking down what the foundational pieces already are so that we can figure out what that money management system is going to be as far as what the best fit is for them. Another thing that a lot of people are very surprised about is that it's not a one size fits all, right? It's not like you can just say, oh, I heard this from an influencer on TikTok and they say this is the best thing for me to do. It may not be. Like, it's very nuanced. That's in a nutshell who I work with and how I help them.
Yeah. Okay. So I
Yeah.
imagine you have couples who come to you and say, hey, we're trying to get our finances in order, or we think we got it in order, but we have these goals or these things like that. So you start with the foundation. Let's look at the numbers. Let's see what's going in, what's coming out. What might be different about your work with couples or versus working with individuals, if anything?
Yeah, it is different because you're working with more than one individual. So you're working with everything that each person brings to the table. And what really like about working with couples is that I'm able to provide them some additional insight into things that they may not have thought about. So a lot of couples will come in and they are in long-term relationships. A lot of times they already have children or they already have property together, but they may or may not have ever had the conversation around what was money actually like when you were growing up? Did your mom and dad talk to you about money? Do you feel comfortable having conversations about money? Because in a lot of our communities, it's don't talk about your money. Don't talk about how much you make. And they don't
Right.
need to know that and things like that. And so it is very different with couples because it's not just one individual I'm interacting with when it comes to understanding what they're bringing to the table as far as like their emotional awareness around what comes up for them when they have money conversations. And so it is a lot. There's a lot of light bulb moments when I'm working with couples because it's like I'm being enlightened as to what my member has experienced, but so is their partner. A lot of times it's their first time hearing, actually, I don't feel comfortable talking about money, or this like guilt and shame relationship with money that I haven't shared with you. So I think that's the number one like difference in working with couples versus individuals.
Yeah, and maybe having some of those realizations for the first time for themselves as you're asking the questions and they're thinking like, yeah, money was always really stressful growing up, or here's what I was taught and told, and I realize I'm applying that in my relationship, but it doesn't work for my relationship, or this doesn't feel good for me and my partner, and navigating that in real time.
Yes, absolutely. Yeah.
Okay, now is there a difference between financial planner and financial advisor? I know I've heard both terms. I tend to hear them used interchangeably, but I don't know if they're actually interchangeable. Can you clarify that?
Absolutely. Yeah. So they are used very commonly interchangeably. But financial advisor, I would just think of that as like a broad term, right? So, like anyone who is managing money, that could be anyone that says they're an investment advisor. They could be called a financial advisor, insurance agents, stockbrokers, wealth
Okay.
managers, even bankers sometimes put themselves in that category with they're identifying with themselves being a financial advisor. The difference between that and a financial planner is that a financial planner specializes in creating a comprehensive financial plan. So it's not just talking about your investments or your bank accounts or focusing on a specific area of your finances. A financial planner looks at everything from budgeting and cash flow to taxes to saving and investing. And then the certified financial planner is a fiduciary, like a standard line where you're going through a certain level of education. You have to take a certain amount of exams in order to be considered a certified financial planner. And then the fiduciary standard is attached to that, where you're not able to provide advice that's going to benefit you or your company. You always have to put your client first.
Thank you for
Yeah.
clarifying that. So when you're working with couples or maybe even with some of the individuals you see that may be in relationships, what are some of the more common money mistakes, we could call it, that you see people making, things that come up for you repeatedly, and how do you support folks through these challenges or mistakes?
Yeah. So one is just having open and honest conversations about money. A lot of folks, and I think people will be surprised to hear this, that typically in a couple, there's normally like only one person who's like more dominant than the other when it comes to managing the finances. Either it's because that person is more interested in finances, or maybe they know more about finances. And so having open and honest conversations is super important. And I think it's a common mistake that people leave out thinking like, oh, we're good. Like we make enough money to cover our bills and we're not struggling. So it's okay for us to not dive deeper into having those types of conversations. Another mistake that I find people make is only focusing on like the short term or intermediate term. So it's very common for folks to get up there in age where they're now thinking about like retirement being maybe 10 or 15 years away. And it's very common for them to think, oh, wow, like we could have started having these conversations like 10, 15 years ago versus now when we're actually closer to retirement. So I always like to recommend, even if you're in your 20s or 30s, let's figure out what retirement may look like for you. Obviously, we won't have a super clear picture, but at least we can start the conversation and educate you as to what your options are for saving and investing, even if that goal is 40 years down the line.
Yeah, because it's so easy to get into the mindset of, I'll figure that out when I get there, or that's a future problem, or it'll be fine. Maybe I have a retirement account at work and I'll rely on Social Security and it'll be fine. It'll work itself out. But so that being one of the biggest mistakes you see, not being proactive or thinking about 40 years from now, what do you want life to look like? What do we need to be doing now to help you get there?
Absolutely. Another thing I would add to that, Sierra, is that I think a lot of people are comfortable in their current lifestyles and they think that they have to make major changes to their current lifestyle in order to have a secured future. And that's not always true.
Okay, yeah. We're gonna come back to that.
Okay.
Definitely. So in terms of the narratives out there about money or managing money, you're absolutely right. Like you said, that there are all sorts of folks you can find online on social media who will tell you, I know the answers. This is what you need to do. Just follow this method, follow my method, and everything will be fine. And it gets confusing. It gets overwhelming. It's hard to know what's true and what's just someone's opinion. And so I was wondering if you could maybe clarify some misconceptions or things that you hear about money in general that maybe not be true. So for example, would you say true or false? Everyone needs life insurance.
I would say true. Yes. But with a caveat, right? So
Okay.
a lot of times the recommendation is you need to get a permanent life insurance policy. Get you a whole life insurance policy or get you a universal life insurance policy. That's not always the best fit for everyone. I do believe everyone does need life insurance, especially if they are earning income. I would add that as well. So if
Okay.
you're earning income and there are other people who rely on you for that income, that's when life insurance is even more important. What I would say is like there are two main different reasons why people get life insurance. One being to cover funeral expenses and things associated with the actual passing of that individual, right? And the other is establishing wealth for their loved ones, whoever they're leaving behind, or combination of the two. Maybe they want to cover funeral expenses, but they also want to establish wealth for their family. So I would contemplate those two things before getting a life insurance policy. And then when it comes to just being educated about the different types of policy, they really all fall into one of two buckets. Either it's a term life insurance policy, meaning it is going to guarantee that you get a certain amount of death benefit for a certain term. Maybe it's 10 years guaranteed, maybe it's 20 years, 30 years, etc. Right? So that is a term life insurance policy. Those types of policies I typically recommend to folks who are on a strict budget and they don't have a lot of like excess cash flow, but they definitely need the policy because they have loved ones who are relying on them for income, etc. The other bucket that life insurance falls into is permanent policies. So those are all the other policies that you may hear about, like variable life insurance, universal life insurance, whole life insurance. Those policies not only carry a death benefit, which is the amount that you receive once your loved one passes away, the insured, but they also have the ability to accumulate a cash value. So a lot of times folks are attracted to that, like, oh, I can get a cash value, like I can borrow money from my policy. And a lot of times I'm like, wait, let's take a step back. Maybe a temporary life insurance policy is actually a better fit for you right now, depending on all the other moving parts.
Yeah. And so it's not as simple as just get whatever's offered to you or whatever you happen to learn about first. It really is going to depend on, like you said, that nuance, the specifics of your situation.
Right. Exactly.
Okay,
Yep.
so everyone can possibly benefit from life insurance, but what type you need, what kind of policy you need is going to vary.
Absolutely. Yes.
Okay. Are there any others that come to mind that, oh, I hear people say this about money all the time and it just grinds my gears? Like, I want to scream this out to the world or correct some misinformation.
Yeah, not, I wouldn't say grinds my gears, but I hear so much about Roth IRA. So a
Oh, yes.
lot of my
I gotta
members
talk
will
about
come in and
that.
they'd be like, do I need a Roth IRA? And maybe yes, maybe no. We don't know yet because we have to go back to the beginning. Let's figure out what your money situation looks like month to month.
Mm.
What do we need in order to sustain your lifestyle? So let's say you came in as a member, Sierra. I would
Mhm.
say, what does Sierra need in order to sustain her current lifestyle in terms of covering utilities, covering the roof over your head, covering any subscriptions that you have? What are the absolute basics? And then we always like to leave a little bit of wiggle room in there for the variable expenses, things like gas, groceries, eating out, taking trips with friends, things like that,
Mm.
right?
Mhm.
Once we get the basics down and we understand how much we can carve out in that wiggle room area for saving for emergencies, making sure we have a solid emergency fund,
Mhm.
contributing to retirement, then we can start to have those conversations around maybe a Roth IRA is a good idea for you versus something else, like just investing in your company 401k plan that may have an employer match. I typically like to check the employer match box first before taking anything else into consideration when it comes to retirement planning, because that's just money that's going to be left on the table. Normally, you do have to contribute to the 401k from your own salary, your own payroll, in order to be eligible for the company match, if there is a company match there.
Got it. Okay. So again, it's not as simple as here's something that's available. It must be for me. It's really going to depend on a bunch of different factors, it sounds like.
Right. Exactly. And
Okay.
that's for literally everything. So,
Mm.
yeah, anything that you hear online, anything that you research, anything that ChatGPT or Google tells you,
Mhm.
yes, it may possibly be a good fit, but it's it's a full picture, right? Going back to that comprehensive financial plan, we have to consider all of the other factors that exist in your life to allow for you to continue living your current lifestyle while also checking off those other boxes.
Got it. So it's just like what I tell people with therapy. Like you can read things online or you can hear about somebody else's experience. Nothing replaces a relationship with the therapist. Nothing is going to replace a relationship with a financial planner who knows the ins and outs of your situation, who can adjust things or make recommendations on your specific situation.
Right. Exactly. Exactly. I would definitely liken it to a therapist. Like I could read as many books on self-help as I want, which I
Mhm.
do. I love self-help stuff, but I
Mhm.
still meet with my therapist on a regular basis so that I can have that third party who's educated and has experience in the field, to where I can bounce those ideas off of and not just run with anything that sounds like it's a good fit for me.
That makes total sense to me.
Yeah.
So I work with couples in a variety of stages in the relationship. Some that are brand new, folks that have been together for decades. So I wanted to talk a little bit about managing money through different seasons of a relationship, things that might be helpful or that folks might want to keep in mind. So if we have, let's say, a newer couple who is preparing or talking about merging their finances in some way for the first time. Maybe I know for my husband and I, the first time we really combined finances is when we were saving for our wedding. Like we opened up a joint bank account so that we could keep a track of here's what we're saving, here's what we have to work with. And it was a really scary the recognition of, oh, we're combining our money and like we telling each other all our business. We talking about credit scores and all of that. So what advice would you give to couples who are in those earlier stages or for whatever reasons, are preparing to merge their finances in some way?
Yeah, amazing question. And thank you for sharing your experience. What I would say is you don't have to do everything all at once, right? So a lot of folks, when they're in a long-term relationship, they're like, oh, we're going to merge everything. Let's just have all of our money go into one account and we'll just have everything together. That's not always the best fit for folks. What I actually find is that it's helpful taking baby steps. So what you said, you opened an account together with your partner as you guys were planning to pay for your wedding. And so you both were able to contribute into that one account and save up in that way. That I love, because that's like a baby step into managing your finances together. Another thing that I like to recommend as well is having just one account for all of the joint finances, because sometimes it's forgotten that we're still individuals, even if we are a part of a couple, right? And so we can have this joint bucket, so to speak, of money that we pull from when we have to cover expenses like our mortgage or our rent or utilities or date night or family vacations, things like that. All of that can be pulled into one state, but you can also still have your own individual accounts. And I really like that for a lot of couples, because then they're able to have their own sort of free to spend, what we call it at Fruitful, we call it free to spend bucket for themselves, where they can just spend however they want, guilt free. As long as it's built into the budget and they both understand what each partner is receiving in terms of their, so to speak, like allowance, then they can do whatever they want with those funds. So I think that's a good kind of like in between versus let's get everything together under one roof. And we'll probably talk about this later on in our conversation. But a topic aside that I love to talk about is what happens when one partner is no longer there, like planning for that, making sure we have beneficiary designations and transfer on death designations. I'd love to talk more about that as well.
Yes, we absolutely will be talking about that. Definitely. Are there certain questions you recommend asking or conversations that you recommend folks having before they're merging their finances or when they're in the early stages of these conversations of figuring out, okay, how do we want to set up our financial management? You got your process, I got my process. How can we figure out a process together?
Yeah, absolutely. So I love for people to be on the same page. So sharing your money history, share your money story with your partner. Share with your partner what you saw mom and dad or auntie and uncle or cousin do with their money that had an impact on you that you still carry with you today. Share with them what your dreams and aspirations are with your money. Like making sure that you're on the same page is super important for any aspect of your relationship, really, but especially with money, right? Just making sure that we are on the same page with regards to what the plan is for the future. And then the other thing I would say also, Sierra, I find that people are nervous about creating their own unique system, right? Like your system doesn't have to look like the couple you saw on Instagram or the family you saw on YouTube. Like it needs to be unique to you. That's the best way it's going to work. So don't shy away from doing something a little bit less conventional just because you haven't seen it in the masses. If it works for you, then that is the best fit for you, as long as you're tracking towards your goals. And of course, the financial planner can help you oversee that to make sure that the tracking is in pace with what you're expecting. But create your own system. It's fine.
Yes. One of the things
Yeah.
I tell my couples all the time is the only rules that exist here are the ones that you create. It's what works for you. It may not work for your parents, your friends, your neighbors, and that's okay because it doesn't have to. It just has to work for the people who are going to be using the system, because the system that doesn't work for you is useless. It's not doing you any good because you're not going to do it. You're not going to use it. Thank you for saying that. Don't be afraid to create something new or something unconventional that works for you. Have you noticed any trends in what season in a couple's life or relationship prompt them to contact you?
New different things. Yeah, great question. So one of the very common things is, hey, we have this debt. We don't know how to pay it off. And we want to make sure that we're saving for emergencies at the same time. Can you help? So that's very common, especially if it's like a issue has come up several times where they've been able to pay off debt and now they're back in a similar position. Another common one is paid. We can cover all of our expenses every single month, but we actually don't have a financial plan. We don't know how everything's working, but it's working right now. We want to have a little bit more structure around that.
Yeah.
And then I think the third most common is just like, are we okay? We know we pay our bills on time. Like, we know we have an abundance, we have savings, like we're contributing towards retirement and all of that. But we just want to check in to make sure like we're okay in general. Like, how
Yeah.
healthy are we financially?
Yes, because it gets scary. It's hard to know, am I doing it right? Is it enough to just, okay, the bills get paid, there's groceries in the fridge. Is that enough? What should I be doing? What should I be thinking about? Yeah, and
Right.
I think especially with all the talk about the economy right now is putting that even more on people's mind. Are we in a recession? Are we headed to a recession? What do we do about that? Like layoffs and people losing jobs, it feels like left and right. Have you seen an uptick in people coming in the last few months, last year or so, or stressed about the economy? And okay, we had this plan, but we didn't account for my spouse is a federal employee who just lost their job. Have you noticed any of that coming into your work?
Especially when it comes to activity in the market, that's always like the time where folks call in. Either they want to establish their membership or they're already members and they're like, hey, just checking in. Like, I saw this is what the market is doing. Are we good? Do we need to chat about this?
Mhm.
And I'm going to say 9 times out of 10, but it's really 10 times out of 10. I've knock on wood. I've never said to anyone, yeah, we actually need to make these changes based on what's going on in the economy. And the reason why I say that is because when we have those conversations, the reason why we start from the ground up is because we want to make sure that we cover all of those foundational bases for you before we even think about investing, before we even expose any funds to what we call market risk, which basically means like there's no guarantee that your money's going to grow, right?
Right.
And so making sure that we understand cash flow, making sure that we have a solid emergency fund. I'm normally recommending 3 to 6 months of after-tax income being saved in a high yield savings account that's not touched outside of for emergencies. And then we talk about other things. Is debt 100% paid down? If we don't have any debt, we're moving on to having the investing conversation. And a part of the investing conversation is we are investing this money long term. 100% of the time, I'm saying this is money that we are not going to touch for 10 plus years. Most times it's 15 to 20 years at minimum that we're not going to touch that money. And so we are having a conversation about what typically happens in the market. We know what happened in 2008. We know what happened in 2020.
Yeah.
And those things will continue to happen in the market. And so we try to not try. We do create our portfolios with that in mind. There are going to be market fluctuations. The market is going to be fabulously fantastic at times. The market is going to be horrible in terms of performance at times as well. But thinking long term, we know overall it's going to be fine. There typically are no changes that need to be made because there are factors that go into creating the portfolio at the onset that include market fluctuations.
Yeah, got it. Okay, so if we've started from the ground up, we can build in some of that wiggle room, some of that flexibility. And if nothing else, we already have the practice of checking in on how things are doing. And that way you can catch any tweaks that might need to be made early before it's like, oh no, we should have adjusted 2 years ago.
Right. Exactly. Exactly. Yep.
Okay. There were a couple of things you mentioned that I wanted to make sure we came back to. And one, you said that people can have this idea that they have to make these huge, drastic changes to their life to retire the way that they want or have the lifestyle they want, manage their money in the way that they want. And that's not always true. I think it's really important for a lot of people to hear. I know something that was like, it was literally life changing for me. I was reading a book by the Budgetnista, and she talks about like, when you get any extra unexpected money, like paying that off towards debt, it might be $5, $10, whatever. And I remember it was getting to be summertime and I was going to the store to buy some shorts. And I had a budget in mind for how much I wanted to spend on these shorts. Let's say I'm like, I'll spend $80 on shorts. And I go and I'm looking at the things and I'm like, okay, this is a good price. I can get X amount of pairs. and still be in my $80 budget. And I get to the register and it's, oh, they're actually on sale. So they're actually cheaper than the price that I was thinking. And so I was like, oh, that saved me like, I think it was like $18 or something like that. And so I made an extra payment of $18 on a credit card. And it just felt so good. Am I going to be a millionaire tomorrow doing this? No. But this is something manageable. This is doable. I can't necessarily save $1,000 a month, but I got this 18 that I was already planning on living without. And so I might as well live without it in a way that's going to help me with my goals. Can you say a little more about the small changes or that really add up and make a difference that you've noticed in your work with folks?
Absolutely. It's really, and thank you for sharing that story. That was amazing. It's really just about the awareness, right? Because when we don't look at our finances, when we don't talk about our finances, and it's something that's going on in the background, like we're not 100% sure what the dynamics are, but we know it's working for us or supporting us in some way, uncovering what's actually happening in terms of cash flow is super helpful because it normally is not, oh, we need to make this drastic change. It's like, oh, actually, I know I can spend a little bit less in this particular area versus another. I know it's not going to feel like a sacrifice because this is what my intention was anyway. An example I can give is someone who's like on a weight release journey and they're like, I want to drink less caffeinated beverages, whatever it is, then it could be something as small as that, even if it's $20 a week, $20 a month that they're able to reallocate to go somewhere else. It aligns with what they already wanted to do anyway. And so that's super simple. Yeah. Another thing is some folks don't even know exactly how much money is coming in. And so the money will just come in, they'll get paid, they know they pay their bills, and they'll look at their account when it's time to answer a text from someone who's like, hey, do you want to plan this trip with me? Or respond to someone who's like, hey, do you want to go out and grab some drinks tonight? And it's not a second thought in their head. And those are like the additional subtle shifts that they can make to say, actually, yeah, I will go grab a drink with you because I know that I have this amount in my free to spend category that allows for me to do that and allows for me to reach my goal. Or maybe they'll think twice about responding to that message and say, actually, can we have drinks at my place instead? Because I have this allocated for this reason. They don't even have to express that. If they don't feel comfortable, they can just offer another plan that they know will be able to fit into the budget that they have planned out for themselves. So those little shifts are things that are very common, and it normally happens very naturally to where it's not like, oh my gosh, I have to change my entire life and not eat out ever and not do anything with friends ever. It's like, no, we can be very intentional about this. The last thing I'll add to that is we like to kind of recommendations for what we call saving spaces, right? So these are things that you typically do throughout the year anyway, but it's very, very common for people not to plan for them. So let's say, for example, you always buy gifts for friends and family for the holidays every year. Without fail, you do it every year, but you don't plan for it. It's very common for folks to say, oh gosh, I know I just spent like $1,200 on gifts for friends and family. And I just like my credit card. And then come January, I'll figure out how to pay for it. And maybe I'll pay interest because it takes me a couple months to pay off my cards at the beginning of every year. Versus having something that's like a saving space specifically earmarked for gifts for the holidays. You're putting away $100 a month. Let's say you get paid bi-weekly. That's $50 bi-weekly. That'll be $1,200 by the end of the year. It won't feel like $1,200 because you're doing it in smaller increments throughout the year. But things like that's one example, but there are tons of other examples like vacations, any travel that you want to do, even self-care stuff that's a little bit more pricey. If you know you get your hair cut every 6 months and you want to make sure you have those funds instead of swiping your credit card and paying it off with interest, you can be intentional about making those small shifts that allow for you to be able to seamlessly do that.
Yeah, and it all starts with that awareness. What is happening? What's coming in? What's going out? If we can start there, then you become more aware of the shifts that you can make without completely changing your life. And like you said, I'll just never buy anything. I'll never go out to eat. I'll never go visit friends and family. I will just stay stuck in the house in the dark and cold because none of these things are in my budget. It doesn't have to be all that.
Right.
Got it. Okay, thank you. And I did want to talk about end of life planning. It is one of those things that I think we avoid talking about in relationships because we
Yes.
hope that is a long, long, long time from now problem and that it just will somehow sort itself out. Nobody wants to think about, oh, I may not be here or my partner may not be here. But it's helpful to think about it and prepare for it in advance. Another thing I heard the budget needs to talk about when her husband died unexpectedly, she said because of how they had managed things and set things up, she got to just miss him. She didn't have to worry about how am I going to pay for a service? Am I going to keep things afloat financially? Because they planned for that. Can you share a little bit about your recommendations or considerations for planning for end of life and that sort of thing?
Yeah, absolutely. And I love that. I love the idea of just being responsible for missing somebody, right? Like you are in that grief mode, and if all the boxes have been checked before that time comes, then you can actually truly just feel, right?
Mm-hmm.
I love that. So, a couple of things. One, in terms of mindset, and I love mindset stuff. In terms of how to approach these types of conversations, I like to encourage folks to think about it like self care. This is a part of your self care. This is a part of how you are expressing your love for yourself, your love for your partner, your loved ones, your extended family. That is a part of that. It can be a part of that practice if you choose to view it that way. So that's one. A couple other like more tactical things that I love to share with my members is creating an inventory of all of your notable accounts, like any and everything that you have funds in, whether it's a joint account or not, just making sure that it is listed out somewhere. Another thing that's super important is the beneficiary designations, making sure that any account that can have a beneficiary designation on it does have one. So these types of accounts are like 401ks, IRAs, things like that. Now, when we're talking about a checking account or a savings account, it's very common for those types of accounts not to allow beneficiary designations specifically in terms of using that phrase. But there is something very similar called TOD or transfer on death. I would highly encourage that. Those are the low hanging fruit things that you can do without spending money on an attorney or anything like that, right? So beneficiary designations, transfer on death designations, and making a list of those notable accounts. Those are top three. Hands down, everyone should like do it now. If you don't have it done,
right
like,
now.
do it
Okay.
right now.
Yes. And yeah, let's start with the easy stuff. Let's start with the stuff that you could do with a phone call or filling out a form because it can get so much more complicated. And so if there is something that you could do now that could prevent you some headache later, why not? I learned that from a friend who had a parent pass away. She was like, call your parents and ask them, do they have these things set up? Because it becomes such a hassle.
Absolutely.
Let's get some stuff set up so that it's one level or layer of stress that you don't have to think about. And I know you work with a lot of families and you work on like transfer of wealth sort of things. For those of us who are raising parents, because the parents don't listen. They don't listen. They think they know everything and you can't tell them nothing. What advice do you have for those of us who are maybe looking a little ahead? For example, there's about a 20-year age difference between my mom and I. And so I always tell her, I'm like, girl, we're going to get old together. Like, we got to figure this out. What advice or recommendations do you have? What should folks like myself, like, what do we need to be asking our parents or checking in about as the ones who will likely be needing to make those arrangements or access those sorts of things?
Yeah, absolutely. Great question. So I would check in with them to make sure that they have those three boxes checked, the
Okay.
transfer on death, beneficiary designations, and a list of their notable accounts.
Okay.
What I would also start talking to them about is whether or not they have any other type of estate plan. So This falls within the realm of financial planning, but more so in the realm of hiring an attorney or getting paying for a service that will allow for you to check these boxes. But a will is important, just
Yeah.
listing out your assets and what you want to happen with your assets. That doesn't allow for you to avoid probate with regards to your assets being passed on directly to your heirs, but it at least is a great step in the right direction to building a fully robust estate plan. So
Okay.
I would ask about that. An advanced medical directive is also important. It's sometimes called a living will. And that basically states like what you want to happen in terms of your medical care if you're not able to communicate. It's basically your parent writing those things down and having it be a legal document stating, hey, I don't want to be resuscitated, or hey, this is what my preference is if XYZ were to happen and I'm not able to communicate my wishes. Piggybacking on that is a healthcare power of attorney. So they normally go hand in hand in terms of the living will and the healthcare power of attorney. The healthcare power of attorney is just you appointing an individual to communicate those wishes. So you can have one or the other or both. I normally recommend having both so that you have that in writing. And then you also have an individual who can advocate for you to say, oh no, I know what my mom wants. She's communicated that to me, like I'm her representative.
Yeah.
Going back to the conversation we were having about couples, it's very important for couples to understand this as well, because folks sometimes are under the impression that if I'm married, of course I can speak for my husband. Of course I can speak for my wife or my partner, right? And that's not always true.
Yeah.
Having a healthcare power of attorney in place is super important just for those reasons. If there's ever any red tape that you need to go get past in terms of sharing what you know your partner wants, having that in your back pocket is going to be so key. And then a durable power of attorney is also super helpful. That's something, it's called durable because it actually becomes in effect when you are incapacitated. So it's not something that is in effect unless that happens.
Got it.
And that allows for someone to assist with any of your financial or legal affairs. So let's say mom or dad, something happens where they're incapacitated, they're not able to pay their bills, but the money's there, nobody's there to cover them. The durable power of attorney would allow that individual who's appointed to cover their financials or any type of legal situation that needs to have some attention on it. And then the last thing that I would recommend, and I know this is a lot, and I feel like what I'm thinking is I don't want your listeners to think, oh my gosh, I have to go through and do all of this. No, this is just information. And I say this to my members all the time. Don't feel like you have to check all these boxes, right? I am just here as your point of reference to provide you the information. When you're ready to cross that bridge, that's when you do it, right? You have the information there. So another thing I would recommend is looking into a revocable trust. There are a couple different types of trusts. Mainly they fall into either irrevocable or revocable. So I won't get into the nuances of those things, but just know that this is one of the main avenues that will allow for you to pass on assets to your loved ones without it going through probate. And probate tends to be very costly. It's extended, where the state that you pass away in has to appoint an executor of your estate. They have to determine where the assets get passed on to, and that costs money and it costs a lot of time. So considering something like a living trust is helpful just to have everything in there, right? And a trust sounds like really fancy and it's like, oh, you have to be like elite to have a trust. No, it's a simple document, right? Like a trust is literally just a set of instructions. That's how I think about it. It's a set of instructions saying, hey, this is me, Durriya Pierce, and these are my assets. This is what I want to happen with my assets if something were to happen to me. That's it.
Okay, good to know. Okay. And like you said, there's all of these options, all of these things that you can do. None of it means I need to get all of this done in the next 24 hours, but here are some things to keep in mind so that when you do have the space, when you do have the capacity, you can work your way through that checklist. And you already told us which things you recommend starting with. If you don't do anything else, let's check these 3 boxes. So yes, that is super helpful. If listeners are like me thinking, okay, I need a financial planner. I need someone to help me think about this and help me get on the right track or stay on the right track. What do you recommend folks keeping in mind or considering as they're working with a financial planner or looking for a financial planner?
Yeah. So I normally like for people to just share where they are when they come in to work with me. Share where you are right now and where you want to be. That way I can get a clear scope as to whether I can actually help you or not. What I love is when people come in and ask me what other examples I as to how I've helped folks in a similar situation. Like, hey, I know you can't give me all of the answers right now, but can you give me like an idea as to like how you would approach my particular situation based on where I currently am and what my goals are? I think that's super helpful to gain a little bit of insight as to what the financial planner in terms of experience and help in that particular area. And then I think rapport is also really important. Like you want to make sure you can talk to your planner, right? I get a lot of folks that come in and they're like, girl, I am so happy it's you because I just feel a vibe between us and we are flowing and going. And I'm just like, yes, that's what I want you to feel. I don't want you to feel pressured. I don't want you to feel like you have to talk about things you're uncomfortable with. I want you to feel safe and empowered with our work together.
Yeah, because we're already talking about money, which is sensitive and vulnerable and scary. You at least want to do that with somebody you get along with or you feel like you can build that trust and that connection with.
Exactly. Yes.
Okay. Is there anything that maybe I haven't asked you about yet or you haven't gotten a chance to share about that you're like, I cannot end this conversation without talking about this?
I think we covered a lot. We definitely covered a lot. What I will say, and I feel like this is like one of the major takeaways that I want folks to hear when they listen to this episode is you don't have to have everything figured out right now. Don't feel pressured to have everything figured out. Some folks are like the type of people who, and you probably hear this sometimes, who clean their house before the help comes in to clean. Like you're hiring someone to clean, but you're trying to tidy up before they come in. A lot of folks do that when it comes to getting financial planning assistance in the cell. Come as you are, come as your full self, be open to feedback, be open to maybe looking at things from a different perspective, and don't beat yourself up if you feel like you're not doing things in the time span that you ideally want them to be done. And I get folks coming in all the time and they're just like, I should be here. This is where I am, but I should be over there. And it's like, oh, you're right where you need to be. You're exactly where you need to be in this moment in time. And give yourself a pat on the back for even starting that process because it's not an easy feat to talk to a perfect stranger about money. And that's attached to feelings and like all of it gets really messy, and that's okay.
Yes. Thank you so much for offering that and sharing that. Come in with whatever you got, wherever you are.
Come on in.
That. Yes. And we can take it from there.
Right.
Yes.
Exactly.
I do always like to give a personal practice, especially when we have guests who have expertise and experience in things that I don't. And so, is there anything that you would recommend for our listeners that they can take from this conversation and apply directly to their life?
Lily, I think it's helpful for everyone to just go through their cash flow in terms of just understanding what's coming in, what's going out. You don't need to sit with a financial planner to understand what your cash flow looks like. And not in an overwhelming way. Oh my gosh, let me go back through the last 3 months of my credit card statements and see where my money's going. No, you can start today. You can start today. You can get in the habit of understanding, oh, I'm thinking about purchasing this. Does it make sense for me to do that now, or should I plan to save up for that? Does it make sense for me to move funds from one account to the other when it comes to investing? So that's one thing I would recommend. Another thing is when you know that there's a certain amount that you want to save every single month, do that on automation. I love automation. If something comes out of your paycheck before you even receive it, like a 401k contribution, or you have a direct deposit going into a completely separate account that you don't really ever touch for emergencies, that happen automatically. It's a lot more challenging for you to manually decipher what's going where at the end of the day when you get paid. So I think those are two places that folks can start right now today where they are, even before even considering whether or not they want to hire and work with a financial planner.
Great. Thank you. Thank you. I know we said that specific strategies or recommendations are going to depend on folks' unique circumstances, and definitely we'll put that caveat, that disclaimer. However, are there any resources or tools that you recommend that you find yourself maybe constantly referring people to, or that have been helpful for folks that you're working with, whether it's books, podcasts, social media accounts, websites, whatever the case might be?
Yeah. Oh gosh, there are a couple of them. One book that I like is The Millionaire Next Door.
Okay.
Another book that comes top of mind is I Will Teach You to Be Rich. And I also love the Budgetnista's material as well. So those are top three, what I would say, great resources to lean on if you're just looking to read up about financial planning in general.
Great. And because I know people are going to be wondering, they're going to want to know, okay, I do want a financial planner, and not only do I want a financial planner, I want it to be you. How can folks contact you or work with you? Are you accepting clients?
Well, yeah. So I am live on our website at fruitful.com.
Okay.
And that is how people can find Fruitful. That is how people can find me as well. So if you go to fruitful.com and click on Get Started, there'll be about a 2-minute survey just asking general questions about what your goals are, what your relationship with money is right now, how you would like to work with your financial planner. What are some of the things that you think about when you think about working with a planner? And at the end of that survey, it allows for you to select the financial guide that you want to work with. Okay. If I am not available on the site, we do have a lot of other financial planners that are amazing on the platform that will be more than happy to assist as well.
Great. Good to know. And are financial planners, are there restrictions based on like where you live or anything like that? Or can you work with folks all over?
All over the US, yes.
Okay. Good.
Yep.
Good to know. Good to know. Thank you. Thank you. Thank you so much, Durryia. Like this was even better than I could have imagined. I love conversations where I'm learning, and I know that our listeners are going to learn. So thank you so much for your wisdom, your expertise. I can only imagine what it is like to be a client of yours, because you are so personable and so easy to talk to, and just good vibes, good times. And those are not always words I use to describe talking about money. Yes, this was incredible. Thank you, thank you, thank you so much.
Amazing. Thank you. Thank you for reaching out, and thank you for connecting and taking time to speak to me. I appreciate the time.
Absolutely. If you're listening, I encourage you to check out Fruitful, find a financial planner if that's where you are in your life, or that's what you think would be the helpful next step for you. And I'll see you next time on From the Heartside Out. Thank you for tuning in to From the Heartside Out, hosted by See the Sex Lady, produced by Christine Johnson of Pure Pod Vibes, and music by Rico the Artist. If you enjoyed this episode or learned something new, make sure to subscribe, rate, and review on your platform of choice. And don't forget to share with a friend so they can learn something too. I'd love to hear your thoughts about this episode. Please send any comments or questions to podcast@seethesexlady.com. That's podcast@seethesexlady.com. Until next time, keep loving, living, and leading from the heart side out.